Welcome to BD Daily Finance News Podcast, your daily briefing on finance and investing. Today is 2026, August 14th, and the market menu is spicy. AI chips, a delayed crypto IPO, corporate debt repair, pound-dollar tension, and leverage hiding inside the AI build-out.
So basically, the market walked into a buffet and said, give me growth, debt, inflation anxiety, and one side order of crypto drama. Very balanced, like eating salad with a shovel.
Story 1. China's biggest contract chip maker, SMIC, is looking at expanding capacity after beating expectations. The company said AI demand is far exceeding previous expectations, and its Hong Kong shares gained 4.8% after second quarter profit more than tripled.
That is not a small beat. That is the earnings report equivalent of showing up to a potluck with a whole wedding cake. But investors still need to ask, is this durable demand, or is everyone just ordering chips because AI is the corporate buzzword treadmill?
Story 2. RedotPay is reportedly putting a $1 billion U.S. IPO plan on hold, according to Bloomberg via CoinDesk. The key takeaway is simple. Even when crypto payments have a growth story, public markets still care about timing, regulation, and risk appetite.
And IPO timing is like hosting a garage sale. If the neighborhood is excited, your old blender is an innovation platform. If buyers are nervous, suddenly everyone notices the blender smells like 2019 stablecoin risk.
Story 3. Dangote Sugar raised $356 million in a share sale. The company plans to reduce debt and strengthen a capital position that was hurt by 3 years of losses. This is less about glamour and more about balance sheet triage.
Balance sheet triage is a polite way of saying the spreadsheet is in the emergency room. For ordinary investors, this is a reminder. Revenue stories are nice, but debt decides who gets oxygen when conditions tighten.
Story 4. GBP USD remains firm above 1.3479 ahead of US CPI. Market Pulse notes upside targets at 1.3547, 1.3580, and 1.3643, while a hotter core CPI could revive dollar strength and rate hike worries.
This is where I disagree with the calm chart people. They make it sound like the pound is doing yoga above support. One spicy CPI print, and that yoga mat becomes a slip and slide.
Story 5. CNBC reports that the AI infrastructure boom is becoming more leveraged and harder to track. Funding is moving through bonds, leases, and private capital, while leveraged investors add another layer of market risk.
I love AI data centers, but when every server rack comes with a mystery loan attached, I get nervous. It is basically buying a treadmill on credit because you watched one fitness video.
Here is the practical investor checklist. First, separate AI earnings from AI storytelling. Second, treat delayed IPOs as signals about market appetite. Third, look at debt maturity and interest costs before chasing recovery stocks.
And fourth, do not confuse excitement with a plan. If your investment thesis is just, quote, AI is big, end quote, congratulations. You have written a bumper sticker, not a portfolio strategy.
Quick recap. SMIC shows real chip demand. RedotPay shows IPO caution. Dangote Sugar shows debt repair. GBP/USD shows CPI sensitivity. And AI infrastructure shows that growth financed with leverage needs extra scrutiny.
Opportunity is still out there, but it is wearing a name tag that says, please read the footnotes. Like, subscribe, and tell us which story matters most for your money this week.